The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the February 25th, the terrific Tuesday edition of today's Trader's Edge show. I'm host Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But during the next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. If you can't dial in, well, we've got you covered there too. Go ahead, send me an email. Let those fingers do the walking. Steve@TFNN.com. Inside the subject heading, please put radio show question. And inside our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. Again, I'm Steve Rhodes. Welcome to the show. Right now, we've got all the indices trading in the red substantially. You've got the Dow off 466, S&P down 51, NASDAQ off 111, Russell is down 42 points, semis are off 32, so plenty to look at there. You've got gold trading down 25 bucks, silver off 67 cents, light sweet crude down 84 pennies, natural gas is up a penny, bonds are up nearly 1 full point, leading the charge dollar-wise. The upside, there are some things in the green. Leading that charge is Regeneron Pharmaceuticals up 23 bucks or 5%. Domino's Pizza not experiencing any kind of problems here. They're up 12.50, up another 3%. Helios Technologies up 6 bucks. Credit Suisse, nope, don't forget about that. That's MedPace Holdings is up 5 bucks. To the downside, the dollar leading to the downside dollar-wise. Lending Tree, I'll get it out. Don't worry. Booking Holdings is off 39. Lending Tree down 43. Palo Alto down off 38. Tesla down 28. Amazon off 20. But, of course, we want to look at what you want to look at. So let's take a look at the general market. This is all about, first, can we find any kind of support or resistance? And now, because we've blown through market profiles, let's begin there. Here, what we're going to do is something just slightly different. We're going to use Stevie's synthetic version of the contract out here. So you're going to see it's got a little squiggly line, then the ES, and it's got a 1 and then a apostrophe. Don't worry about that. What this does is this allows us to stitch together all of the prior futures contracts in a way that is helpful to you and I in taking a look at their profiles. Now, many of these profiles are going to be different than what we see, but more data, more better for us. So here we're going to begin by taking a look at the ES mini. So on the very left-hand, upper left-hand panel, and again, the weekly profile here is going to be different than if I just switched over to the March contract, which is going to get ready to expire here soon. In any event, if we take a look at, so when we get below one time frame profile, we go to the next. So we're below the daily. We can clearly see that. Now we go over to the weekly. And so if you're asking me, is there any possible support out here for the ES Mini? Well, you're looking at the bottom of its weekly profile. That number is 3163. The low so far today, 3166. So look for that as one possible place of support. The weekly structure of this box is slightly bullish, meaning that center is closer to the bottom than it is to the top, but it's not substantial. But still, you've got potential support at 3163, about 3 points away from the low of this morning. If price closes below that on a weekly basis, so it really doesn't mean on Tuesday, it means on Friday. But if there's a close below 3163, then we go to that next level. Well, the next level would actually be the top of the monthly profile. Now, that would be in lieu of some new weekly or daily profile that would be forming. So in this case here, what you're looking at would be a move down to 29.10. The ES Mini is not there yet, or the S&P futures. So watch that 31.63 level. Let's do the same thing. I can do this for 3 of the 4 equity futures contracts. I can't do it for the Russell, and that's because of a symbol change a year and a half ago, and so I can't really stitch together different symbols. I haven't figured that one out, and I'm not going to spend any time because I don't think it's figurable, so to speak. But we can go take a look at the NQ. And we take a look at the NQ, here's what we see from a profile standpoint. Again, these profiles different than what you and I looked at yesterday, but I believe at this stage of the game, based upon what it is we're seeing in the marketplace, this is the place to hang out. Right here at 1:11 in the afternoon with Stevie Sun. Now, we can see that prices below those daily profiles out here, and prices gotten back inside of the weekly profile. The top of that box, 92.87. The center is at 90.94, and the bottom is all the way down to 84.20. Now, the real importance here is when we come to the end of the week, my experience is the following. If we see a close below the center of that bearish structure, so the weekly profile inside the NASDAQ says, on a weekly basis, if you get a nice close below 90.94, and I'd have to say where we're at right now is good enough, 89 and change out there. But again, this would be a Friday thing. If there is a close below that, in fact, what I would use really out here is I would just simply use this little candle from January 27th. So a close on Friday, we'll come back to Friday, below 89.25. That would suggest that sellers should be able to push price down to support in the NQ. Where is that? On the weekly basis, you're looking at 84.20 out here. Let's go take a look at the Dow. So now if you take a look at market profiles, the only savior out here is going to be the ES Mini, which is testing the bottom of that weekly box. Now, again, we're taking a look at larger time frames, but in order to be able to put things into perspective. Now let's go take a look at the Dow equity futures contract. Well, we know it's below the daily. We also know it's below the weekly, and that sets up the Dow wanting to make a run for the 25,850 to 25,926. That is for the top of the monthly and top of the quarterly profiles out there. So from a support standpoint and taking a look at those time frames for the equity futures contract, those are the numbers to be paying attention to. Now, there are other levels of support to take a look at. Let's stay with the equity futures contracts. Let's go back to the ES Mini. So we know on a weekly basis, using Stevie's synthetic contracts out there, what we have in place right now is a test of support. On the daily time frame, price is now testing. It's slightly below it, but it's testing the second breakout area. That second breakout area takes us to 31.81. These breakout levels being generated by our TD setup 9 count. So a close below this, a close below that weekly profile would suggest a move down to 31.16. That's in taking a look at the daily time frame. Let's go step it up a notch. Let's go take a look at the weekly time frame out here. I've got enough bar data out here to take a look at that weekly time frame chart to say that a move down to the 29.82 area, where 31.73 would be its natural pullback on a weekly basis, because that is the last breakout level inside the ES Mini out here. Let's go take a look at the NQ. Do the same thing. Well, we'll have to do that when we get back from the break. I think I can squeeze the NQ daily in. Let's do that here over the course of the next couple of minutes out here. And here you can see the NQ is testing its breakout area. And that level is 89.66. Subscribers, this level is different than what was shown in the email this morning. I've identified a little bug in the system I'm trying to fix. But 89.66 is the right number. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's off 552, S&P 62, NASDAQ down 142. Let's get to some of our questions. We can go back to just the general market conditions, the charts, and so forth. We'll do that, but I don't want to I want to make sure that we get to all the questions that have come in. So if you do want me to take a look at something, please get that sent up by email now versus towards the end of the show out here. So let's go to our first question coming in here from Michael P. Michael wants to take a look at LL. He's in with some calls. So let's go take a look at that as lumber liquidators. Let's put up our 3 time frame charts out here for Michael. Here's what we can see. There's a brand new daily profile, Michael, that formed today. Really wide box out here. Runs from 760 at the low. That would be support to resistance up at 1090. Now, resistance has been tested and it is held thus far. So you know that that is a resistance point that you're looking for price to clear on lumber liquidators. On a weekly basis, price is above the top of its weekly profile. On a monthly time frame, looks like price would be targeting 1287, the top of that box. Well, let's not stop there for Michael. Let's go take a look at lumber liquidators out here and put up our other charts. Take a look at other time frames or signals out here. Do we see anything? I see a nice Rhodes momentum indicator bottom back here. That was confirmed with that bull sash candle. So that's the nice bottom out here. Do we see any kind of a top? We don't. All that we see out here is price running in resistance. That's at the 1090 basis on its daily time frame. Let's look at the weekly charts. The weekly charts, what do they communicate to you and I? At this stage here, we could also see a nice Rhodes momentum indicator bottom, that little hammer candle back in August of 2019 out here. We don't see anything different than what we took a look at on that weekly time frame chart earlier. From a monthly basis out here, the monthly time frame, I see wave number 7, that is letter G. So you've got bottoming signals inside of lumber liquidators on its daily, its weekly, and its monthly time frame. And again, that monthly time frame is suggesting to move up to the top of that box, 1287. You know that 1090 area is the next place that you've got to get through. So I hope that that helps you out. Thanks so much for writing in. That was for Michael P. Tim writes in, and Tim wants to take a look at, he's asking for, where do you see support inside the semiconductor out here? He's asking specifically about SOXL, which is an ETF. But, Tim, what you and I are going to do is we're actually going to go take a look at the indice itself. because that's where we're going to hopefully identify. Let me pull the chart over. Let me not speak before we get to the chart, but hopefully we're going to see some type of TD9 count breakout level. So here's what we know with regard to the semis. They topped with a TD9 count pattern out here. We can see that. When I say we can see that, the day we're looking at is February the 14th on Valentine's Day. Yesterday was a gap below support, the first level of support, 1849.83. So the next level of support out here, Tim, with regard to the semis SOX, the SOX indice is 1714.75. Now, I'll put up SOXL. Give me a second here to change over to do that. But what I would really be watching, Tim, is I'd be watching the semiconductor indice versus, what might be like a triple ETF or something like that out here. I think that's what SOXL might be. But on its daily time frame out here, let me populate the chart. Its next area of support potentially at 220.11, but that's not really matching up with what we took a look at inside the semi. So I would be more apt to pay attention to the semiconductor index level of support than I would on this triple ETF. So I hope that helps you out. Thanks so much for writing in. The next question, let me see here. This is coming from Dan the man Levitan. And Dan wants to take a look at HP, not PQ. Got it. Okay. So HP is the ticker symbol out here. And let's let this populate. I'm short HP on weakness in energy out here. Let me, was this Helmut Payne or something like that, I believe? Reload all historical. I just want to reload the historical data, make sure I don't have any kind of data flow issue. Can you please show the profiles for it in the short, medium term out here? So your profiles, first of all, you're short this. And the next level of support, which I really think is what you're asking me for, is really going to be both the bottom of the daily profile as well as its daily breakout level. That's at 39.28 out there. I don't know if that level will hold, but those are your next levels of support. They're very close to each other. 39.28 is the breakout level, and 39.48 is the daily bottom of its box out there. Let's go take a look at the weekly time frame. If those levels get broken, really same rules apply that we took a look at out here. Prices below the weekly bottom of its box out here. And so I don't have another level of support for you on a weekly time frame. Out here, I don't have another TD breakout area. Let me look at the monthly time frame for you. Let me populate its tools and indicators. Its tools and indicators are going to suggest to you, and this is a level of support that is held, is 37.59. So you've got the 37.59 that's coming from your monthly time frame. You've got 39.28 on the daily time frame. So Dan, I hope that helps you out. You said you're targeting the 36 area. So you really are looking in essence at the monthly 37.59-ish. So thanks for writing in. That covers all of the questions so far that I can see for folks that have written in. The only other question I see out here is coming from Ruby. And Ruby Tuesday. It's Tuesday, and Ruby's asking that question. And she's asking a great question. And I think she got the answer because I did not, during my opening, talk about Turnaround Tuesday. And she's asking, Steve, no turnaround Tuesday as I see it today. And that's a fact at the moment. Let's go try to explain the reasons why out here. So let me move over to some short-term time frame charts. Let's go take a look at, when I say short-term time frame charts, let's go take a look at the 30-minute charts. Let's look at the 30-minute ES Mini. If we take a look at it, we'd be looking for some type of bottoming pattern or signal out here. Ruby, the only bottoming signal, so price is now pushing lower with energy. There's no more of those black diagonal lines on my screen out here. So, and that's the more ideal pattern to see on a short-term time frame. It's not the be-all to end-all. And it doesn't say that we can't see a bottom here. But the bottom pattern to be watching, Ruby, with regard to today, it won't be during Stevie's show out here. It could be right at the end of it. This is going to be bar number 8 of a TD setup 9 count. This is where we have, on a 30-minute basis, we've had 7 consecutive closes where each close has been a close below the bar 4 bars earlier. It looks like we're going to be in bar number 8. Now, if this is going to identify a bottom, Ruby, it could be on bar numbers 8, 9 being 2 p.m., or the bar following 9 would be 230. So it's a possibility between 130 and 230 inside the ES Mini where you would see some kind of a bottoming pattern for some type of counter trend rally. At least that is what the 30-minute time frame chart is communicating to you and I. You put that together with, remember, we looked at the weekly synthetic version of my contract. We saw that the ES Mini was pushing down to a key level of support, the bottom of its weekly profile. Let's go take a look at, well, why isn't this moving here? That's not a good thing. Got to move it off my screen back to where it belongs. The 30-minute chart for the NQ, Ruby. Same pattern, really, that is setting up. No Rhodes Momentum Indicator bottom, but this is going to be bar number 8 of a TD setup 9 count. So if there's going to be a bounce, so to speak, a counter trend rally, it should occur between the hours of 1:30 and 2:30, or by 2:30, if that's going to occur. A turnaround Tuesday, not so fast. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 549, not 249 out there. Let's go to caller. We've got K. Rico. K. Rico, thanks for giving us a call. Are you in Florida, Costa Rica? Where do we find you today?
Hi, Steve. I'm in Costa Rica, and if we get disconnected, it's because we're having a little more tremors, and the Wi-Fi internet just gets cut right down.
No problem.
So
Hey, What is the ticker symbol that you wanted? I think our guys might have punched in the wrong symbol. T like Tom, P like Peter, A like well, you know what I mean, a apple.
Yeah.
But is that what you want?
T like Tom, Z like zebra, A like apple.
TZA. Okay, so you want to take a look at the IWM then, basically. Okay, so tell us what you're doing and how I can help you.
Okay, here's the situation. I was just mildly observing this morning when the Dow was up, I think, 150, whatever at its high, TZA was actually up, not down. And I'm like, well, what is that? What is that forecasting? Something I don't know. Are the holdings in the TZA getting affected by the coronavirus more than the other stocks? I mean, do you follow what I'm saying? It was like a tell. What's going on? I'm thinking.
So, I mean, the TZA is going to be your triple ETF to be short the Russell 2000. And, I don't know that I can really go back and really replicate what you might have been seeing this morning on your screens. Here's what I can share with you with regard to, let's say, chart patterns inside of the Russell 2000. And what took place today is what the Russell 2000 equity futures contract did was it broke its consolidation pattern. It had really been consolidating in between the level of 1630, that was a key level of support, and 1697. So that gives us really a measured move range, which is about around 80 some odd points out there. So we should be able to deduct 1680 from 1616 or whatever the exact math was out there to tell you where the Russell 2000 daily equity futures contract is likely headed to. I would suggest it's probably in the area of around 1544 out there. So if you are, I don't know if you're long or you were just making an observation out here, but for the folks that might be short the Russell 2000, I want to certainly take a look at the daily equity futures contract, let them see a key level of support that was broken, and then where that next level of support is, which is 1544 out there. So is it just an observation, or are you in this trade?
Observation. I was thinking to myself, well, this is really strange. You got the Dow at the early part of the first half hour of the day up $1.50 approximately, and the TZA's up 30-40 cents, and I'm thinking, wow, what should I derive out of that other than I thought of you?
Well, thanks for thinking of me. I appreciate that. That's what it took. It took some kind of strange anomaly or divergence in order to think of Stevie's son. I'm just kidding you. But I don't have an answer for you, K. Rico, because I really can't go try to recreate that on my screen, so to speak, out there. My apology for that.
Yeah.
I don't know.
But I'm going to pay attention. I'm going to pay attention to that if I ever do another trade in the morning where there's as you say, a divergence. Something must be telling something about something, possibly.
Yeah, I don't know where to go with that one, but so how are things in Costa Rica?
Well, keeping it simple, and I hope you got my email. I'm working on the project, and soon the podcast will begin, and soon I'm going to go to battle. If you know what I'm saying.
I do. Hey, K. Rico, always great to hear your voice. Stay safe out there, and thanks for thinking of me. I appreciate it.
I did. Thank you, man. Take care.
You bet. That was K. Rico in Costa Rica out there. Of course, we want to hear from you folks as well. 877-927-6648. Let me just take a quick peek here. And I don't see any other requests. So we're going to go back to Ruby's question, who's trying to search for some type of bottom, maybe a bounce out here. So, Ruby, we took a look at the TD 9-count patterns inside the ES Mini for the 30-minute time frame in the NQ. And I had mentioned, I said, what it doesn't have, my preference would be to see some kind of Rhodes momentum indicator. What does, or the time frame, the shortest time frame, or one of the time frames that does have that potential of a pattern, is the 60-minute out here. So I would like to see if there's going to be this TD 9-count bottom that forms between 130, that's now, it's 135, and 230 out there. Continue to watch the 60-minute. And on the 60-minute time frame, assuming that this Rhodes momentum indicator pattern still is in place out here, look for some type of bullish reversal candle. That would at least give you enough of a group of bottoming signals out there. And you can do the same thing. All 4 of the equity futures contracts for their 1-hour time frame is really doing the same thing. So let me come over here and let me put up the NQ. And the reason is because if you don't see that bullish reversal candle out there, there's no attempt really being formed. Here's the 60-minute time frame for the NQ out here. You can see prices pushing lower, doing with less relative energy. Here, inside the NQ, what would be even worse is the mere fact that it doesn't hold the bottom of this hammer candle that took place at 12 noon. So there was, on a 60-minute basis, the first legitimate bottoming signal for the hourly time frame. But what failed out here, what failed to occur, is price to be able to get over Stevie's red line out there. That's just your basic natural knock it down area. And that level right here on a 60-minute right now is at 90.28. So any little counter trend rally really needs to get above those levels. But watch your 60-minute time frame as well out here. Now, we may not see any form of turnaround Tuesday today, but there's going to be one heck of a, and I know what you thought I was going to say, there's going to be one heck of a bounce or bottom out here. If we go take a look at that New York Stock Exchange, yesterday we were talking about the minus 150 level and a couple of different tools and patterns that were out there where we're taking a look at the spot volatility index. We did see almost a 400-point move overnight from low to high inside of the Dow, so we most certainly got a bounce. Of course, that rally got sold off. That's very clear. Now, as we take a look at panel number 2 on this New York Stock Exchange chart, you're going to see that advanced decline oscillator is below Stevie's second yellow line out there, which is minus 250. It's not. 150 is oversold. Minus 250 starts to get into the gargantuan oversold level out here. We're down below levels that we haven't seen since that bottom that formed on December 26, 2018. Now, you may remember, if you can take yourself back to that time period where Santa was delivering coal to everyone out there across the world because markets were just simply moving lower and in a sizable way. And if you take a look at that reading for that advanced decline oscillator, it got down to minus 318. So are we at the lowest level that it can get to? No, we're not. I'm just trying to give you a little bit of history out here. Because if there's one thing you and I know about these markets, is that history repeats itself over and over and over again. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Phone lines are open, 877-927-6648. No email questions, nothing inside the Tiger's Den right now. We got the Dow down 618. S&P is off 66 points out here. So what do we want to go take a look at? Let's go take a look at some of the let's go take a look at some of the usual suspects out here that folks have requests for. Let's go take a look at Goldilocks. You've got gold off $27. So before we go to gold out here, I mentioned the spot volatility index, folks, is up only 8% right now today. Hey, after yesterday's, 53% move or whatever, not so easy for it to have a one-day rate of change above 10%, but it doesn't look like we'll get. Well, I don't know what the end of the day will look like. But as we speak right now, no reason for us to really go into it. I just thought that I would go ahead and mention that. Let's go take a look at Goldilocks. What do we know out here at this stage of the game? Gold trading out at 1648. And at 1648, what we have here is we've got a confirmed Rhodes momentum indicator topping candle. Now, the key level to be watching for gold, you've got a TD9 count top that was on the bar following bar 9. That was yesterday. So now you've got that topping pattern. You've got what appears to be a bearish reversal candle. We won't know till the close. But the next level, or the key level of support to be watching here, is going to be 1628.40. Drop the 40 cents because that number is going to go up or down as price moves higher or lower. But just think about 1628 or give it $1 in there, a point, so forth. If there's a close below that, then the next level of support for gold would be pulling back into the 1551.70 to 1577 area. Inside that group is a number of different potential support levels, but that would be your range, 1551 to 1564 out there. And like these markets that can drop in an instance, so too can Goldilocks. But right now, it's still above support, even though it's got confirmed topping patterns out there. If we go take a look at this silver, here we're taking a look at silver. We're taking a look at May out here. Silver is confirming that Rhodes momentum indicator top, and price here is trading below Stevie's green line. That is 1828. Maybe that is giving you a signal as to what gold is going to do. Can't guarantee it, but right now silver giving the more bearish of the messages. Watch its close. Anything below 1828, it confirms that silver wants to head to lower price out there. There's a request inside the Tiger's Den. This is coming from Bodie out here, and mRNA is the ticker symbol. What is mRNA? I don't know, but let's go punch it up on our 3 time frames and see what pops up on our screen out here. That is going to be Moderna. Having a nice day out here, trading out at 23.16 with 31 million shares. Big volume in this. So you are long, or you're just saying, I don't know if you're long or not, but you're just simply asking for what it looks like from a long standpoint. Well, look, price above the daily, in between the weekly profile. It's a weekly profile that began last week out there, Bodie, and you're looking at 23.95 as being a potential resistance area. This instrument hasn't been around long enough to get a monthly set of profiles out there. So your next level of resistance on the weekly is going to be that 23.95 area. And not seeing any reason why it shouldn't hit that. If we put up the daily time frame, we populate it with all of our tools out here. No topping signals on my screen whatsoever on the daily time frame. If we go take a look at the weekly, no topping signals here. However, remember, Bodie, we took a look at the top of its weekly profile, 23.95. Well, before price gets up there, it had a breakdown area. And that breakdown area is all the way back here. This formed, just so you know, this formed on the week of May 24th back in 2019. And that level, by the way, just so you understand how strong of a resistance level that is, you can see that price tried to get up here in the week of January 24th, shooting star, bearish reversal candle. The very next candle was a bearish reversal candle as well, bearish engulfing candle. Then you had another big bearish engulfing candle the week of Valentine's, February 14th out there. And price there stopped right at that 23.60. So you'll know 23.60 to 23.95 is going to be your tough area to get through. On the other hand, if price can clear that, boy, that tells you that this thing is going to run much higher. But we don't know if it's going to get through it. I don't know if you're long or you're not long. What you do is you tighten up your stop or what have you. Would you enter this now if that was the question? Heavens to Betsy, whoever Betsy is, no. Well, I would ask you this question. Based upon looking at this weekly chart, you're just looking up at this 23.60, this little resistance area, would now be the time to enter a long trade? And the answer would be absolutely not, because that resistance is out there. So I hope that helps you out. Thanks so much for writing in. And that was for ticker symbol mRNA, Moderna Inc. out there. Okay, so let's go back to just some of the usual instruments, the usual suspects out here. Light sweet crude, what do we have for light sweet crude? Nothing good. Price right now trading below Stevie's red line, and it's really testing the bottom of its daily profile out here. So if it's going to find support, it needs to do it basically pronto, like right about now. So that's what I see when we take a look at light sweet crude out here. Natural gas. What do we have for natural gas? Natural gas. There's a new profile. Let's do that. Let me do that for you. We'll show you the new profile for natural gas out here. We're going to try to. It should be right here. It says a pop-up. Yeah. So natural gas, you've got a brand new daily profile. Let me just expand the chart that way it doesn't confuse anyone out here. And here you can see a brand new daily profile forms yesterday. Bottom of that box at 1.81. Center is 1.88, and the top is 1.953. I just don't have a clue at this stage of the game what natural gas is going to do out here. But it's remained basically flat and unchanged today. I'm not really sure what to make of that. If you're looking to go along natural gas, then ideally you'd wait for price to test the 1.81 level out there. If it closed below that or was trading below that, then you'd have to say, hey, maybe not so fast. So that's what we see. We take a look at natural gas. Treasury bonds, if we take a look at T-bond futures out here, what are they doing? They've entered day 6 of a TD setup 9 count out here. Very likely going to continue to move higher and do so for at least a couple of days out here. Maybe it's going to form a TD setup 9 count. The earliest we would see that would be on Thursday, Friday, Monday, Sunday, kind of a thing out there. What else is it that I can look at for you? What is it that I can look at for you? Gosh, I don't know. I don't really know. What else can we look at? So, I was talking about, or we were looking at the New York Stock Exchange. We were taking a look at that advanced decline oscillator line down below that minus 250 area. So extreme oversold. If we take a look at the spot volatility index out here, you're still going to see the same thing that we saw yesterday. It's actually worse than what we saw yesterday. What is worse than what we saw yesterday, Steve-O? What possibly could be worse than what we saw yesterday? Well, if we take a look at that spot volatility index, trading out at 27.15, we haven't seen much movement in the futures contracts out here. A little movement, but not much movement. Again, the furthest out is October of 2020. Kind of makes sense. That's 2182. Maybe that's the little election jitters out here. But backwardation out here is extreme. There's going to be some major rallies. We just don't see them just yet. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So in the 2-minute wrap, we're going to begin by taking a look at this data table right here. And this data table is showing the global flow of capital for instruments across the globe out here. So we're taking a look at the ETFs that represent many different countries, and we're trying to understand where that flow of capital is. It still coming into the U.S. or is it going out of the U.S. out here? And so if we think about it like this, if it's going out of the U.S., is this really all caused by the coronavirus? I know that's what's talked about, and everybody's always searching for something out there, but maybe they're looking underneath the wrong stone or the wrong pebble. So here's what this, and so all I've done is I've come back and we've taken a look at the last 8 days, basically from when the Dow formed its top. Now, the Dow is the trophy horse in the U.S., internationally speaking. International funds like to invest in the Dow. This is the trophy horse out here. And if we take a look at the Dow, it's down about 7.5% rate of change since that high 9 trading sessions ago. It's actually a lower percentage-wise, similar in euros and dollars, slightly lower in terms of yen, slightly higher in terms of Great British pound. But here's the thing. The U.S., as you can see, other than Brazil, is kind of leading the charge to the downside. I would expect, or would have expected, or we should have expected, with regard to the global flow of capital, which has been moving into the U.S., that we wouldn't see the U.S. out in front out here. So it may not just be a coronavirus thing or not. It doesn't really matter. The real point of this is that we don't see that global flow of capital pouring in here. And that basically, I know folks talk about, the Fed being or in theory, being the buyers out here. No, it's really international money that was the buyers. And what we can say as a 1:56 in the afternoon, they're not present. They're not here to say aye. Hope that helps you out. Stay tuned, folks. 2 great hours, and I'll be back with you tomorrow on Wonderful Wednesday. Have a terrific Tuesday. Have a taco for Stevie. Take care.
Since 1984, Basil